Welcome to Innovate Finance's UK FinTech Week 2021, and today is day 3. And this session is on KYC technology, best practice insights into digitising, streamlining, and scaling your KYC operations. We are joined today by experts from Deloitte's forensic and digital financial advisory practices, where they will be sharing personal insights into the best practices and common pitfalls as well associated with KYC technology transformation. I am very pleased to welcome Hamza Khan and Nick Liebmann. So Hamza Khan, who brings with him over 12 years of financial services experience, he is the director at Deloitte's financial advisory business, specializing in executing large, complex financial crime change programs, in particular, anti-money laundering and financial crime IT solution development and implementations. I am also very pleased to introduce Nick Liebmann, who is the assistant director at Deloitte Financial Advisory. Nick works very closely with Hamza and also runs a multidisciplined software development team within Deloitte's digital financial advisory, developing the firm's products and platforms to address client requirements within the UK and overseas. So Hamza and Nick also work on the KYC Flow as business lead and product development lead, respectively. KYC Flow, which they will talk about, I'm sure, in greater detail during the session, is Deloitte's in-house next-generation cloud workflow and case management solution to address client challenges across the Know Your Customer lifecycle. And before I hand it over to our amazing speakers for today, to our audience listening in today, please send over your questions and we'll aim to answer as many as we can towards the end of the session. So thank you so much for joining us today, Hamza and Nick. And now over to you both.
Thanks, Rashi. Good morning, everyone. And on behalf of Deloitte and Innovate Finance, I wanted to thank you all for your attendance and welcome you to today's session on KYC technology. Today's session is focused on providing you with insights into how KYC technology can help digitize KYC data, streamline and scale your KYC operations. Over the next 30 minutes or so, we'll aim to explore the challenges that are currently being faced by financial institutions in adhering to their KYC regulatory obligations and the drivers behind adoption of technology to digitize and streamline KYC. Cover areas of technological innovation that are contributing to the digitization and streamlining of some of these KYC processes, discuss some of the common challenges and pitfalls we see in the industry faced by institutions looking to adopt some of this innovative KYC technology, cover approaches successfully adopted by organizations in managing their KYC obligations, and then provide you with a brief overview of Deloitte's proprietary KYC solution, KYC Flow. And finally, end with a session on Q&A. We will be covering a lot of material today. So as Rashi stated, if you do have any questions, please do pop them into the relevant box and the team supporting us today will collate them for review in the Q&A section towards the end. Now, since Rashi already introduced myself and Nick, let's just dive straight into the webinar. We'll kick off by exploring some of the drivers impacting KYC. Whichever end of the spectrum we look at within the financial services industry, be it big banks, insurance, capital markets, brokers, payment service providers, and even fintechs, KYC has continued to prove to be a challenge for some time now. And though the industry has made significant strides forward, a number of endemic issues are still very much prevalent. We'll try and bring some of these to life in this particular section. The financial services industry has continued to go through a digital transformation, and that has affected all aspects of business. It has also affected KYC. Customers have adopted digital and are increasingly expecting onboarding and KYC verification to be underpinned by digital as well. And what that means is they're expecting streamlined journeys. However, these journeys remain manual from an end-to-end perspective, and organizations have often had a piecemeal approach to digitizing these processes and controls, and which obviously leads to manual overheads and workarounds. Linked to the first point, we see increasing adoption in the industry of digital onboarding journeys, particularly by fintechs or digital-first operating models. However, we've seen in a few instances where these firms are now having to go back and bolt on additional financial crime controls where there is an element of manual checking of verification information and subjective decision-making associated with understanding what the risk of having a relationship with the customer actually is. In addition, these are relatively straightforward to design and implement for simple or less complex entity types. But for the more complex end, such as non-personal customers, they can become quite convoluted. Anne Bodin, the CEO of Starling, mentioned in her fireside chat on Monday that the focus for Starling now is on looking at the more complex end of the non-personal SME space, where business is still, where onboarding in business is still very manual in nature. Due to the poor quality of customer data, in addition to a lack of supporting infrastructure and technology to digitally store customer data, such that it can be utilized for financial crime controls, financial institutions seem to be stuck in this endless, perpetual cycle of customer remediation, which we all know is costly, time-consuming, and very disruptive to business. Data is key to optimizing the customer lifecycle. How an institution can effectively onboard customers, provide customers with the best suite of products and services, build customer loyalty, and of course, effectively manage the financial crime risk they are exposed to. This is particularly challenging in organizations that deal with very large, complex clients in multiple jurisdictions. Think of a global bank dealing with another global conglomerate or a multinational where they provide business across multiple jurisdictions, countries, businesses, service lines, and deal with many different points of contact. To get your head around all of this, the plethora of all of these touch points, there is a real driver for supporting technology and data that can provide you with line of sight into what the depth and breadth of that relationship actually is. I'll bring in Nick now. Nick, do you want to maybe just talk about some of the key requirements we typically get from clients when we discuss optimizing their KYC processes?
Yeah, thanks, Hamza. So we as a group understand that actually there are many different roles that kind of play a function in part of that onboarding kind of KYC process. And it's very key to kind of make sure that the technology that we have is kind of suitable to the particular need of that particular persona, particularly when it comes to data and functionality. You know, we want to make sure that the right data is being kind of surfaced in the most appropriate way, so that actually it streamlines the analyst to be able to make their decision-making process kind of much more efficiently. You know, as technologists, what we don't want to do is to kind of overload the analyst with a wealth of data that can kind of create this kind of confusing picture to be able to kind of decipher whether they should go forward with that particular client or not. So it's really about making sure that that process is really kind of tuned. You know, it's something that we've spent a lot of time in KYC Flow developing.
Thanks, Nick. We'll now look to discuss some of the recent innovations within the industry. And fortunately, there have been a number of exciting technological innovations within the industry that have helped with strengthening financial crime controls and streamlining the processes associated with undertaking and adhering to KYC regulations. But before we look at the innovations, I just want to touch upon regulatory scrutiny, which again is a key driver behind why firms are looking to optimize their KYC processes and adopt some of these technological innovations. Regulatory scrutiny and interventions across the financial industry have been on the rise. And that is essentially forced firms to look to improve their financial crime controls such that they can meet their obligations. This has often resulted in significant wholesale investment in technology that can help improve the capture and storage of customer data, and in turn support some of the financial crime controls throughout the customer lifecycle. The cost of getting it wrong can mean hefty penalties, with the FCA handing out over £220 million in 2020 alone, and the largest ever fine being handed out for anti-money laundering breaches. So keeping the regulatory scrutiny aspect in mind, let's take a look at some of the innovations that we now see within the industry. Next slide, please, Nick. Electronic ID&V is something that has revolutionized onboarding. particularly in COVID times, whereas previously we would look, institutions would rely on certified copies of passports, driver's licenses, utilities bills, or articles of association. Now leveraging the abundance of available technology and vendor solutions, this can be done via fully integrated journeys. These typically include a selfie verification liveness check, followed by authentication of the identity documentation that is provided. These can also include usage of corporate registry databases. These controls have proven to be highly effective and have helped streamline the processes associated with onboarding or refreshing customer information. Within the same theme, through mobile and internet banking journeys, financial services firms have helped customers adopt digital credentials, and in doing so have enabled themselves to capture and store customer data digitally for the purposes of KYC and downstream financial crime controls. Now, this is a theme that we will revisit multiple times in today's webinar. This has helped accelerate the move away from large unstructured document repositories, which are often not very well organized and are extremely difficult to interrogate in order to source relevant customer data. Data providers have managed to further expand the depth and breadth of the service that they provide, thanks in part due to the improvement in corporate registry data and more bespoke paid for registries that cater for certain entity types. Some data vendors have vast libraries of data with more than 400 million companies, detailing information not just on the company, but their ownership, their directors, their UBOs, their senior management officials. And all of this can be packaged up for easy consumption. In fact, some vendors will also provide a more bespoke service where if you're unable to find the data on a particular company in a certain jurisdiction, they will engage the local teams who will source open source data for you, curate it, and provide it to you for consumption. However, with the multitude of data providers, reconciling data and naming conventions can become very, very convoluted. And this is where aggregators come into the fold, because what they're able to do is source information from all of these sources, standardize it, and provide it to you for consumption, which makes it easy for us to discern where there are gaps in our customer data and what we actually need to complete KYC processes. Nick, do you want to bring to life our experience of having worked with some of these vendors and the very, very large data sets?
Yeah, so obviously with this kind of wealth of data to hand that Hamza kind of alluded to, what we've seen with clients is that generally they tend to prefer to go with one provider as their kind of single primary data set, or golden source as we call it, which we can then kind of corroborate with other kind of data providers and also kind of aggregators to be able to provide that certainty that the data that they've got is accurate for that individual entity, and actually whether it makes sense as well. I think fundamentally, with all of this data, we kind of want to ensure that actually it's simple to understand and easily you're easily able to kind of corroborate that data kind of very quickly and easily. So you're not spending lots of time trying to analyze, well, do these kind of different fields kind of match up? So just simplicity and ease of corroboration in essence is what we're looking to do.
Thanks, Nick. And similar to data providers, screening vendors also now provide a multitude of services, rather than just providing their infrastructure for you to undertake screening. They can provide a full range of screening services, including sanctions, PEPs, SIPs, adverse media, and additional risk filters. These filters can be tuned to your risk appetite in terms of the breadth, the type of screening you want to do, and the depth, the look-back periods associated with the screening that you would like. Some of the largest financial institutions and even technology companies utilize these screening utilities for managing the ongoing financial crime risk associated with their customer portfolio. Some vendors can also provide additional services, such as addressing the level 1 alerts via their own teams, leaving your teams to only focus on true positives. They also provide AI and machine learning supported services that consume the outcome of your investigations and tune up their algorithms, which will over time sift out false positives, leaving line 1 teams to only focus on true concentrations of risk. Cloud first, or more generally, architecture that enables API integration has been key to leveraging some of the innovations that we've talked about. They allow us to not only develop digital customer journeys from start to finish, but as part of that journey, enable us in calling multiple services such as electronic ID&V, customer risk assessment, screening, anti-fraud checks, and support the capture and storage of customer data in an ecosystem such that it can feed downstream financial crime controls. The benefits of cloud-native solutions are that they enable limitless expansion. They help reduce the costs associated with system upgrades and enable us in spooling up new solutions almost instantaneously. Going back to the fireside chat from Monday, again, the CEO of Starling spoke extensively in her session about being able to leverage and utilize all of the benefits associated with an API-enabled architecture. She also spoke at length about banking as a service and how other firms and fintechs are now calling on Starling's toolkit and utilizing their infrastructure and embedding a lot of these services as part of their own unique user journeys. Now, everything we've talked about helps us address the problems of KYC as we see them today. Digital identity is where we feel the industry is headed in due course. And for those of you wanting to know more about digital identity, one of our financial crime partners, Del Nadaraja, is hosting a session tomorrow as part of FinTech Week, detailing digital identity and what the future may hold. In summary, digital identity will enable you to hold your own credentials, digital credentials, that have been verified and are stored in a digital wallet. These can then be used for onboarding purposes and to grant access to products and services. With the introduction of digital central bank currencies, interbank digital currencies, and as the Chancellor shared his views on Monday in his opening speech, developing a regulatory sandbox to look at distributed ledger technology, all of the news and developments seem to be pointing in this particular direction. Next slide, please, Nick. Now, having discussed some of the exciting innovations and technological developments within the KYC space, we wanted to spend a bit of time talking about some of the common challenges we see organizations experience when they're aiming to uplift their KYC processes and implement some of this technology. We'll start off with onboarding channels. And uplifting of onboarding channels is key to preventing further poisoning of the well by turning the tap off of customers onboarded to due diligence standards that are not necessarily in line with your internal policy or regulatory requirements. This may sound easy, but is actually very difficult to do, especially if you have a very large number of onboarding journeys underpinned by architecture that is legacy in nature. Regardless of the customer type, some may have more manual onboarding journeys and others may have more automated digital onboarding journeys. The key point here is that we want to capture all of the relevant customer information and use it to service financial crime controls effectively and efficiently. If we don't address this, companies will find themselves in an endless loop of customer data remediation. Data quality is key to KYC and managing financial crime, as it allows us to accurately identify our customers, risk rate them, and enable ongoing screening of our customer portfolio. However, key to maintaining good data quality is infrastructure that supports the digital capture and storage of data, a theme that we will touch upon many times today. We find that due to legacy solutions and manual processes, data quality evidently suffers. Poor data quality, of course, has the added impact of downstream financial crime controls not performing effectively, and as a result, remedial activity then needs to be undertaken. To solve the data quality problem, we need to look at it from an end-to-end perspective, from onboarding and KYC all the way down to storage in strategic data ecosystems, such that this data can be interrogated and can inform financial crime controls that rely on it. Often, third-party data sources are seen as a panacea to address material data issues. However, having worked on this challenge on multiple occasions, data sources are at best a supplement rather than a substitute for addressing customer data challenges. Legacy system architecture also provides a real handicap when looking to adopt the innovative technology that we've talked about today. From onboarding all the way through to the customer lifecycle, it makes it difficult to leverage API connectivity and utilize the efficiencies associated with some of these digital onboarding journeys, data, screening vendors, and of course, the digital capture and storage of that particular data. It forces upon the organization the need for workarounds and manual processes, which are inherently inefficient and open the organization up to additional risk, which is operational and financial crime. You often have to spool up a cottage industry just to maintain all of these workarounds, which break all the time. We do, however, note that moving off of large-scale legacy system architecture is expensive, time-consuming, and also very disruptive to the overall business. Calling in Nick once again. Nick, do you want to share our experience of good practice when it comes to architecture and data management?
Yeah, thanks, Hamza. So with any kind of KYC platform, the ultimate goal is to be able to have that really kind of seamless, integrated kind of process. So there aren't those kind of manual workarounds, as part of kind of the entire kind of onboarding kind of process. Where this becomes challenging is, as Hamza said, those legacy non-connected systems that are often used in some kind of businesses where there's this kind of significant amount of work that's needed to kind of make sure that the data is correct and valid, and more importantly, uniform. And again, coming back to this connectivity point of view, there are no kind of easy methods to be able to kind of extract this data. This is actually where we can see some kind of specialized tooling and automation be able to kind of come into play to try and kind of shortcut some of those kind of extensive manual processes that may happen.
Thanks, Nick. And just doing the last two in reverse order to how they are on the slide. Extensive customization, which is another common challenge and pitfall that we see organizations get into as they struggle with the adoption of out-of-the-box functionality, because they aim to superimpose off-the-shelf solutions onto their existing operating models with extensive customization, rather than reimagining how they could use the benefits of some of this next-gen tooling and optimize their existing operating models. This, again, is an approach that is inherently inefficient and requires extensive support. There is a lot of talk in the industry about the future being digital and straight-through processing. However, as we were reminded by some of the leaders of the industry when they spoke on the panel on Monday about how the financial services respond to digital transformation, the future still very much will be human, but will be digitally enabled. We need to move away from document gathering and data collation to analyzing and undertaking due diligence. Even as we automate manual elements of KYC and financial crime controls, there will always remain a subjective element of risk decisioning and determining whether something is within risk appetite. This can only be achieved by embedding a risk culture. Imagine undertaking due diligence on a high-risk customer. You have to undertake the risk assessment. You need to ascertain whether the nature of business is in line with risk appetite. Do the source of wealth and source of funds stack up? All activities that require human judgment. You can have the best technology, but KYC will never be effective if it is treated as a tick box exercise rather than effective risk management discipline. Next slide, please, Nick. Having discussed some of the common challenges that we see with customers and organizations face when it comes to adopting some of this innovative technology, we thought it would be useful in sharing some good practice approaches utilized by organizations in helping address the challenges associated with KYC, in streamlining the processes and helping to scale their operations. And we kick off with triggers. Once the customer portfolio has been maintained to an appropriate level of due diligence, organizations can consider moving to more of a trigger-based mechanism at maintaining the CDD within their customer portfolio. This includes having technology that can support the ability to consume triggers for event-driven reviews on their customers from both internal and external sources. Within the same theme, utilize the efficiencies brought about by leveraging screening utilities, and in particular, undertake ongoing adverse media screening on your entire customer portfolio as well, in addition to just sanctions or PEPs, and build that added layer of financial crime controls, because that will help support the move away from just periodic renewals to more of a trigger-based ODD. Maintaining KYC on customers doesn't always have to be a resource-intensive process. build functionality into your channels, into your customer channels that allow you to refresh customer data via interventions through everyday business interactions. These interactions could be digital, or they could be more manual in nature. This approach and mechanism will help keep your customer data up to date on an ongoing basis. When you think of data, always consider its digital capture and storage. That's because only then it can drive downstream financial crime controls more effectively, such as accurate segmentation for transaction monitoring, assist in the development of auto disposition rules for screening purposes, and aid in investigative processes. It can also provide you with insight into customer behavior and inform other business-related initiatives with regards to which products and services would best serve our client or this particular relationship. So, key point there being digitally capture and store the data so we can interrogate it and use it for other business processes. Now, having considered all of the innovation and all of the challenges, have an understanding that there are no silver bullets and that solutions need to be use case specific. The use cases are predicated by the nature of the customer and their inherent complexity. The key here is in developing a user journey enabled by technology that makes it easy for the end customer to provide relevant KYC information in a streamlined manner, and then for the organization to undertake appropriate due diligence checks in line with policy and regulation, and for these processes to be supported by appropriate end-to-end workflow for effective management of capacity and resources. Now that nicely brings us on to the penultimate section of today's webinar. I understand we've been through a lot of material at some speed, and we'll now provide you with an overview of Deloitte's proprietary KYC solution, KYC Flow. Having worked on CDD programs, and by the way, KYC Flow is something, as Rashi mentioned at the beginning, that myself and Nick have led the development of. Now, having worked on CDD programs for many years and almost always having to deal with the challenges of disparate technology processes and a lack of systemic controls, we decided to build KYC Flow from the ground up, taking into consideration all of the lessons we'd learned along the way. KYC Flow provides you with a clear end-to-end view of the case management processes and using automation to help deliver a positive experience for the end customer, while helping our customers meet their regulatory requirements in a robust and cost-effective manner. It allows us to service all of the KYC use cases: onboarding, ongoing due diligence, remediation for simple and complex entity types. So to provide you with a quick overview of some of its key features, Nick will now play a video, and then I'll give you a couple of examples of recent use cases where we've deployed the tooling successfully. Nick.
Know your customer obligations can be challenging, especially when you add into the mix disparate technology, processes, and a lack of systematic controls. But they don't have to be. Introducing KYC Flow, technology that streamlines and scales your KYC operations. It integrates with your existing systems and is tailored to your policy and regulatory requirements. Flexible and cloud-based, KYC Flow is configured to provide a solution that meets your needs in hours rather than days. Case completion is streamlined through automated data gathering and screening, which updates relevant fields for each case. We also help manage and maintain your customer portfolio through periodic renewals and ongoing monitoring. Its real-time data allows team capacity to be managed more effectively, enabling more rapid responses to case issues and bottlenecks. KYC Flow also transforms your customer communications by giving your customers self-service access via the interactive outreach portal. This allows them to quickly and easily respond to case queries. For example, submitting additional identity verification and documentation. And because we know KYC operations inside out, we've designed features such as QA/QC workflow review processes, which help support quality file outputs in line with regulatory expectations. KYC Flow acts as a single source of truth for managing case queries. Secure, irreversible audit logs can drill down to a data field level, whilst analytics and management information give you key insights and transparency of progress in real time. The platform has the ability to geolocate to conform to local data restrictions, with remote access and system controls, letting you assign access and permissions for different user groups across jurisdictions. Whether you're wanting to draw on our managed service or a standalone technology solution, KYC Flow streamlines and scales your KYC operations. Learn more at deloitte.co.uk/KYC Flow.
Thank you, Nick. Hopefully that provided all of you with an overview of some of its key features, and just looking at the time, making sure we save up enough for the Q&A at the end. I'll just touch upon two use cases where we've successfully deployed KYC Flow, both in the managed service and a software as a solution scenario. So we undertook a big ticket remediation for a global wealth manager. And utilizing a lot of the tooling that the functionality that you saw, we were able to take the big population, pre-enrich it with data from third-party data sources, and then only get the analysts to work on key gaps. And we were able to tie together on one single flow our team in Cardiff, a team in Ireland, the client team that was dotted all over Europe, including the relationship managers and wealth partners. And we're able to work down this very large population with a fairly small team in just a couple of months. Very, very powerful, because we were able to utilize a lot of the automation and streamlining brought in by the functionality that the solution has. In fact, the client was so happy with the outcome that they requested to continue using KYC Flow as their CDD repository until they made more of a strategic decision on their technical architecture. Another use case is where we've enabled the onboarding of thousands of customers in a very short amount of time. Again, similar to what you would see as a digital onboarding journey, we were able to design a journey where customers, personal and non-personal, are allowed to jump onto the portal, provide their information. We EID and V them, would check them for their information against relevant third-party data sources. We screen them, and we only look at exceptions where there is a possible risk. And that way we're able to get a lot of volume through the pipe in a fairly automated, straight through processing manner. That nicely brings us on to the Q&A section. Rashi, back over to you.
And I'm on mute. Hello, thank you so much for a great overview. And now, so that we know that this is not only a tick box exercise, just that you had mentioned. Guys, keep sending in your questions, but the first one we received was, what are the main challenges you see with the adopting of the new KYC technology? What are the key challenges?
Sure, I can go on that, and then Nick jump in if required. It depends on, again, the use case that we're solving for, but really the themes that we see have to do with poor data quality and architecture that doesn't support some of this new innovative technology that relies on cloud and API integration. When we have situations where you can't support that and you have poor data quality, you are really unable to leverage a lot of this new functionality. And that doesn't just apply to KYC technology. If you have poor data quality, your customer risk assessment won't work properly. You'll end up with a lot of noise in your distribution. Similarly, you'll be unable to undertake appropriate segmentation that will allow your transaction monitoring systems to work effectively, or your screening and filtering to work appropriately. If you don't solve data quality, which unfortunately requires KYC to work, and such that downstream financial crime controls can be effective. So I bring it back down to data quality and legacy system architecture.
Great. Nick, do you want to share?
Yeah, just for me, and I think it revolves around kind of that cloud-based architecture where, you know, in some kind of sectors, there's kind of that nervousness around the security involved in cloud, developing the stuff in the cloud. But I just want to put out there that actually, you know, the cloud, you know, with sufficient controls is, you know, more secure, yeah, than kind of potentially some of the legacy systems that some banks have. So, you know, there's a real misnomer between, you know, the cloud not being secure enough, whereas actually I think it's completely the opposite. And actually people can take comfort from the amount of input that the big kind of cloud providers put in to be able to make sure that the data is kind of safe and secure.
Perfect, thank you. And we have another question which has come in. So in relation to onboarding customers, how do you identify what customers to look for at further? How are you defining or flagging risk in relation to those customers?
Clearly a question from a financial crime SME, as this is the bit that we're all trying to get our heads around. But really, it comes back to risk appetite. And what is in or out of risk appetite. So when I talked about exceptions within a streamlined process, if the customer says that they sell guns instead of buttons, again, nature of business or occupation, those are ones that we want to be looking at. So we want to ensure that we have really good focus on red flags as part of our onboarding process. And where certain red flags are identified, that is an exception that falls into a queue where we would want to do some additional plausibility of, well, what is the risk associated with this particular customer? So there's some red flag analysis, and then there is also an element around screening, which gives us some additional comfort that actually there is nothing nefarious associated with this particular customer and that we can do business with them. So red flag, screening, and then eventually customer risk assessment, which typically is a composite model that takes into consideration a whole host of factors and will tell us whether, you know, a customer is high risk and requires enhanced due diligence.
Perfect. Nick, would you like to add anything to that?
I think just kind of underpin some of the technology where, you know, one of the difficulties that we've certainly seen is that a lot of the clients tend to have very different kind of risk models. Yeah, and sometimes it's very hard to kind of create this kind of generic out of the box system that will do everything for you, because it just doesn't work, because everyone's requirements is very different. So there's that element of tuning and trying to identify, well, what are those kind of particular rules that we can quickly and easily implement into any system that you want to be able to use to monitor that risk.
Perfect, thank you. So the next question, as I'm just conscious of time, we have an attendee who's saying, I know there is, you know, no one size fits all, but what would you say is the baseline for the use of digital ID and we? That is, would you need to use selfie technology?
Again, great question. And in line with the, you know, increasing adoption of using some of the selfie technology, I did a webinar for a number of law firms yesterday, and actually in the JMLSG equivalent for law firms, which is called LSAG, they have had an update in their guidance that basically says you can use it, but then you need to appropriately document and provide the rationale in what circumstances you're using it and for what types of customers you're using it for. So bringing it back to the financial services use case, what it is allowing us to do is getting away from certified copies of documentation, which is what we've done for a very long for a very long period of time. And the technology is actually quite robust, right? It has some really good quality rates associated with it. So addressing this particular question, we need to look at the use case that we're solving for. If we are on the more simple end of customers, so you're dealing with a Hamza Khan or a Rashi Pandey or a Nick Liebmann who want a current account or a card to do some spending on, right? It's just them. You can use that to identify their identity, right? So we're making sure that they are who they say they are, and which is why with the selfie check, there is typically a liveness element of that as well. And then we verify some documentation associated with it. So on the more simple end, it makes sense. However, if we are then dealing with, let's say, a really big global multinational, right? We're trying to get copies, we're trying to get, let's say, the CEO to do a selfie check rather than provide a copy of their passport documentation. it may not work in that end, right? So we just need to make sure that we tune the usage of this technology to, well, what is the right user journey that we're looking for, and how that best helps us manage risk.
No, that's great. And I'm just conscious, the time, and we have a few questions, maybe time for two, but does KYC Flow support batch screening? If so, what's the batch size that can be handled?
Yes, so we can do batch screening. Nick can maybe tell us about the size a little bit more, because it is cloud hosted, so we don't have any issues with sizes. And the 2 points that I'd mentioned about that is, we can do batch screening, but we can take your portfolio as a whole and put it under ongoing monitoring, such that we have monitoring on an ongoing basis. And if there is a particular screening provider that you want to utilize, because that is what's in line with your risk appetite, and we don't have integration with them, we'll build that integration and we'll do it for you, even though we have integration with some of the more famous names, such that we can utilize and service most of the use cases.
Nick, do you want to?
So in theory, we have no real limit in terms of the batch size. You know, we all manage this kind of in a sane way. But typically, we can do kind of thousands in one go. Typically, you know, but yeah, again, it depends on how quickly you want to be able to have this data. Do you want to be able to kind of go through the kind of process? You know, as Hamza said, you know, the ability to be able to do this kind of ongoing monitoring, to be able to put a portfolio under that ongoing monitoring, to be able to kind of have that kind of fed back, you know, is something that we as a group have kind of spent a lot of time just making sure that it's really easy for the analysts to kind of make their decision. They're not having to kind of go through an entire daily batch. They're only having to look at, you know, any events that get raised as and when they happen, you know, which we think is much more efficient.
Perfect. So guys, you know who to contact if you want to know more about KYC Flow. And one last question. I mean, we have a few, but I'm really sorry. We do have to close the session in a couple of minutes. How do you effectively connect the disparate tech legacy systems? And how do you manage the workflow effectively, including not just legacy, but also the variety of systems and data sources?
Okay, so I'll have a go at answering that, and then Nick can maybe add on to that, because we see this problem at many clients, right? As I stated at the beginning of today's webinar, that clients have had, or organizations have had, a piecemeal approach to addressing this particular problem. What we want to be able to do is ensure that we have a workflow that covers, when it comes from a case management perspective of doing KYC, it covers from the start to the end of the journey. So I'm talking about when you bring customer information in via channel, you have risk rated them, and you surface that information up for an analyst or an investigator to work on, all the way through to core banking systems being updated, such that we have ongoing screening on that particular customer. Now that workflow will be able to support some of these manual workarounds, and we're putting some systemic controls for some of these manual processes. So even if we have a legacy architecture where things don't talk to one another, we can apply a workflow on top of it that makes sure that all the bits of the jigsaw puzzle happen at the right time and come together. So that's how you can work around dealing with legacy technology. Nick, maybe you can add a bit more about how you would actually end up connecting.
Yeah, so very quickly, I know we've got a minute left. So essentially what we look to do is to be able to integrate kind of those upstream systems into our platform. Now, ideally, these kind of upstream systems would be able to connect to an API, but we know that some of these legacy systems don't have that capability. So this is where we look to our data analytics kind of partners to be able to say, okay, using some of their kind of tooling and technology, actually they can go and scan all of these different kind of systems and be able to kind of feed that into our kind of process. So yeah, so we've got lots of kind of tools and technologies that we can use kind of deploy should they not have that API capability.
Perfect. Thank you so much. We do have a couple unanswered questions, but thank you so much, Hamza and Nick, for joining us today and for this insightful conversation and presentation on KYC technology. For those of you who want to get in touch, Hamza and Nick, would you like to share some details, how they can reach you?
Of course, if you just go on to deloitte.co.uk/KYC Flow, you'll find both mine and Nick's details there. email details and telephone numbers. So please do feel free to reach out and we'll address all of your questions.
Perfect. Thank you so much once again. And to all our listeners, feel free to tune back to UK FinTech Week sessions as well, and we'll keep seeing you. Cheers, guys. Thank you so much.
Thank you all.
Bye.